Hi folks, David Waring here again with LearnBonds.com. In our last lesson we learned about investing in bond funds. Today we're going to continue our Learn Bonds in 15 Minutes video course with a lesson on investing in municipal bonds. So let's get started.
The municipal bond market is absolutely huge. If you combined all the other types of bonds issued in the U.S. together, they would equal less than a third of the number of municipal bonds. There are over 50,000 different government entities that have issued municipal bonds, and over 1.5 million different municipal bond issues. This means that there is enormous diversity in the municipal bond market in terms of interest rates, maturity, safety, and how easy they are to buy and sell. So what are municipal bonds? Also referred to as munis, municipal bonds are bonds issued by state governments, local governments, and government agencies such as port authorities or water boards. Because they are issued by state and local governments, municipal bonds are normally free from federal taxes. If you buy a municipal bond in the state where you reside, then it is normally free from state and local taxes as well. This can make the income from municipal bonds very attractive, especially for people in high tax brackets. There are two primary categories of municipal bonds. The first are general obligation bonds. General obligation bonds are municipal bonds which are backed by the full faith and credit of the state or local government that issued the bonds. The second are what is known as revenue bonds. The difference between general obligation and revenue bonds is that revenue bonds are backed by the revenues from the project they were issued to fund. Examples of the type of projects that are funded with revenue bonds are toll roads and sewer systems. Recently there has been a lot of questions surrounding the safety of municipal bonds. In 2010, Meredith Whitney came out with a report saying there would be hundreds of billions of dollars worth of defaults over the next year. She was dead wrong. Here's a table showing the default rate of rated municipal bonds compared to rated corporate bonds. As you can see from the table, the municipal bond default rate for rated bonds is only a fraction of a percent. Does this mean all municipal bonds are safe? No, it does not. The large majority of the municipal bond market by dollar amount is rated single A or higher. There is a big drop-off in the quality of bonds rated below single A. Many smaller bond issues are also unrated, and defaults are much higher for unrated bonds. Lastly, there are many bonds which are classified as municipal bonds, but do not carry the same level of safety as bonds backed by the revenues of a government or government entity. Generally, you want to avoid municipal bonds which are rated below single A, unrated, from Puerto Rico, tobacco bonds, real estate or healthcare related, and industrial development bonds. That's our lesson for today. In our next lesson, we will wrap up our Learn Bonds in 15 Minutes video course with a lesson on portfolio diversification, income, and bonds versus bond funds. Want to learn more about municipal bonds? Click the link below to visit us at LearnBonds.com, find us on Twitter at LearnBonds, and follow us on Facebook at Facebook.com/LearnBonds page. Thanks for watching.